Hey everyone, welcome back to our US Gold Roundtable. I'm Jonathan Kosares with George Cooper and Peter Grant. We're doing a little bit better job. We're trying to do our best here to make these a little bit more frequent, and with everything going on, we're going to try to keep you up to date, I guess would be the way to put it. But here in just a few weeks since our last video, we've had a lot happen. Gold has basically gone up about $300 over the course of a few weeks. The pace of the gold market, everybody's saying, is going parabolic, although we are in the midst of a pullback now. We've talked many times in videos past, we're always fans of pullbacks, but we can talk a little bit about how gold got to where it is, what's happened to cause that, and what to take away from how quickly it went up and now the subsequent pullback. So I guess, first straw since last time we had our video was the downgrading of the U.S. debt. That's what really started to accelerate the gold price. Right. So,
and only one of the rating agencies downgraded the United States to AA+, which is still a pretty good rating. But nonetheless, losing our AAA status was certainly a blow on some level. Yeah. It didn't really do anything in terms of bond yields. In fact, it had the exact opposite effect. Exactly, yeah. And in fact, the bond yields, on the 10-year fell below 2%.
Lowest ever.
So it didn't really have any real impact on the market. But gold definitely sort of accelerated from that point forward, because I think the writing is on the wall, and while Moody's and Fitch didn't downgrade the United States, they continue to look at our fiscal situation with a bit of a jaundiced eye, and perhaps there is further downgrades in our future.
Right.
There's a little bit of blowback from the downgrade. There's now an investigation. The SEC wants to investigate S&P. And I read an email about the person who was behind it. I don't remember his name right now, Sharma, or perhaps you know the guy. There are some political implications going on here as well, and it just kind of makes you wonder if it was truly an error. They overlooked they made this $2 trillion error, of course, and that's the big debate, and that we should not have earned the downgrade. Tim Geithner kept saying that there was no way they'd be downgraded, and they kept playing that audio over and over again, and of course he said he'd crow about that, anyway, you're going to say further?
No, you're right. There was apparently a pretty substantial error in terms of the math of the downgrade. But one of the primary motivating factor behind it was the logjam in Washington, and that there's very little confidence in the political process in the United States to generate the necessary compromises to advance the situation. Right. And I think that that's a reasonable concern, and we've talked about it on a number of occasions in our videos, and we've certainly written about it in the newsletter and so forth, that in this particular political environment, nothing meaningful gets done. Well, it's a kick of the can down the road, much like this hike to the debt ceiling was.
Right. And I would add that, and to the same point, the downgrade, while maybe not having the math behind it, obviously there was a degree of it that people believed, that people felt was warranted, because it showed reactions in the market that people believed ought to be happening. We had crazy volatility in the stock market over the ensuing basically week and a half, but the stock market is still down about 1,000 points from its high. And people are really worried about the economy, worried about what our government is going to be able to do. And the ensuing flows into gold are a big part of what caused gold to go so high. And I've seen a lot of people referring to part of gold's run as fleeing the risk trade. And so it's this idea that people aren't willing to take a lot of risk in our economy because they don't believe that there is the ability to advance it. And so whether S&P was right or wrong, it is highlighting an underlying belief in people, or suspicion maybe would be the better word.
Yeah, I think that suspicion and doubt about the so-called risk trade and whether it's appropriate to be, so heavily allocated to equities and so forth is a reasonable mental exercise to be going through right now. And I think that perhaps the downgrade was a bit of a catalyst that sort of triggered that in a lot of people's minds. It's like, do I really want to have all my eggs in the equity basket at this point? And I think the answer is, kind of unequivocally no. And so that creates these safe haven flows into gold. And there are other safe haven flows too, so it's probably worth mentioning that field has been narrowed to some degree. The Japanese yen and the Swiss franc garnered a lot of safe haven flows as well. The Bank of Japan obviously concerned about a high yen right now, and so they intervened to suppress the yen. The Swiss National Bank intervened directly as well, but perhaps more notably, they made some noises about possibly pegging the Swiss franc to the euro, basically pegging to what might arguably be a failing currency to protect their export market.
Right.
And so suddenly the Swiss franc and the yen are not all that appealing anymore as a safe haven, which just increases the appeal of gold.
Right.